Good afternoon, ladies and gentlemen. My name is Don Webby, and as chairman of Key Insurance Company Limited, it is my distinct pleasure to welcome you to Key's 2020 Annual General Meeting. This meeting is the first AGM since Key became a part of the Grace Kennedy Group. Unfortunately, due to constraints caused by the COVID-19 pandemic, we are unable to host you in person. Instead, this afternoon's AGM is being held virtually pursuant to court order dated October 21st, 2020, which granted the company permission to hold the AGM in this manner. A copy of the court order is available on the company's website at www.keyinsurancejm.com. Let me repeat that, www.keyinsurancejm.com. I'm very pleased to welcome the shareholders who are present online. I was also happy to receive proxy forms from our shareholders representing over 95% of the company's issued share capital. Thank you very much for joining us, our shareholders and colleagues online. And thank you for our shareholders who sent in their proxies of over 95% of the company's issued share capital. Ladies and gentlemen, this afternoon, we'll be making some very critical decisions about Key's future. This is why the board of the company considered it prudent to apply for the court order to host the AGM virtually so as to ensure that you have the opportunity to fully participate in making these decisions. We look forward to engaging with you on these proposals, which, once successful, will give Key a stronger platform from which to successfully execute its strategic initiatives. To this end, we encourage you to submit your questions. At the bottom of your screen, there is a tab marked Q&A. Simply click on it, type your question, and submit. We will attempt to answer all questions this afternoon, time permitting. If, however, we are not able to answer all the questions today, the responses to these questions will be posted on our website. I thank you again for your continued support of Key, and we look forward to getting through this challenging time together, as we say, #stronger together. We'll start this afternoon's proceeding with prayer and invite those persons in the room and online who are so inclined to join us as Ms. Kerry Ann Evans lead us in prayer. Ms. Evans?
Let us pray. Dear Lord, we thank you for the blessing of seeing another day. As we gather for today's virtual AGM, we ask that you be with us, remain in our midst, regardless of where we may be. We pray that you will help us to make decisions that will aid in the betterment of this company, decisions that will be pleasing to you, Lord. We pray for clear communication and for understanding. Please guide our discussions, enlighten our minds, and give us your grace, Lord, so that we may all walk away feeling empowered. Bless our endeavors, dear Lord. And please continue to grant us your continued mercies. In Jesus' name we pray. Amen.
Thank you. Thank you very much, Kerry Ann, for that wonderful prayer. I would now like to officially introduce Miss Kerry Ann Evans in her capacity as company secretary of the company and who will perform the functions of secretary at today's meeting. Will the secretary please advise if a quorum is present?
Number of 2 as provided for in Article 58 of our amended Articles of Incorporation is present.
Thank you, Ms. Evans. The virtual format is new to us all. So I will share with you the procedures for voting on the resolutions. First, to move or second a motion, please click on the raise hand function at the bottom of your screen. 2, once the resolution has been moved and seconded, it will be displayed on your screen. You can then cast your vote for or against. Be sure to click the submit button at the bottom of the poll box. 3, using this method, we'll be voting by simple majority. If, however, a simple majority in support of any of the resolutions is not achieved, then the chairman has the right to call for a poll. Given the virtual format of this meeting, the poll voting process will be conducted at a date to be set, following the meeting with the usual requirements such as a sealed ballot box, a scrutineer, and the external auditor being present. The details of how the poll will be conducted and the poll results will be communicated via our website and published in the press. As all shareholders will have received notice of this meeting, which was incorporated in the annual report submitted to you as all the addendum to the notice, which was subsequently circulated, may I please have a motion that the notice of the meeting and the addendum thereto be taken as read. Moved by?
Moved by Kareem Tomlinson.
Moved by Kareem Tomlinson. Seconded by?
One moment, please. Carleen Isaacs.
Carleen Isaacs. Thank you very much, Kareem and Carleen. I declare the motion carried. We will now do a brief presentation. I will start the presentation as the chairman's introductory remarks. Then I'll hand over to our general manager and our CFO. So ladies and gentlemen, welcome. This is our first, as I said before, AGM that Grace Kennedy will introduce Key Insurance Company Limited as a subsidiary of the Grace Kennedy Group of Companies. I think it is very important, my fellow shareholders and owners of Key Insurance, that the presentation this afternoon, we start off by saying that COVID-19 has really changed the world in a short time. I wanted to share with you the chart that on February 2nd of this year, 2020, the first death of COVID-19 was in China. And the WHO on March 11th declared it a pandemic. Right here in Jamaica, colleagues, only 225 days have passed, and we now have 8,374 cases of COVID-19, and unfortunately, we have 174 deaths. So the question is, how has Grace Kennedy and Key been preparing for this horrible, horrible pandemic? Well, we started quite early. We created our business continuity plan as part of the Grace Kennedy Group, which Key is now a subsidiary, from January 29, 2020. We set up a steering committee from March 3rd of 2020. And this committee actually meets on an ongoing basis, virtually on a daily basis, to determine how we navigate and manage this crisis. The first item on the agenda of these meetings is the safety and well-being of our staff. The safety and well-being of our staff. And right now, as we have a strict work from home policy on a rotation basis, about 60% of our staff is actually working from home. In addition, we are spending quite a bit of time throughout the group and with Key, managing our liquidity, looking at cost containment, and of course, cost reduction. And throughout my presentation this afternoon, you will see that at all times, we're looking for opportunities in this crisis. And of course, as a part of the Grace Kennedy group of companies, we care. Giving back to our communities is extremely important. So let me take you through the timeline of Grace Kennedy's acquisition and where we are today. So on December 3rd, 2019, Grace Kennedy, we acquired 15% of the company. And on March 24th, 2020, we acquired an additional 50.23% of the company. So as at March 31st, our shareholdings is 65.23%. We also made a decision that we are going to, or we have graduated on April 7th, April 8th to the main market of the Jamaica Stock Exchange. You recall that the company was actually listed on the Junior Stock Exchange. So we like to use the term graduated to the main market of the Jamaica Stock Exchange. And today at our AGM, we'll be seeking the approval of a rights issue resolution by you, our shareholders, to strengthen the capital base of the company. In terms of our shareholders, I think there's such an important story as I present this slide. So on Jan 1st, 2020, we had 171 shareholders on our registrar. As we speak today, we have 501 shareholders as at October 21st and today. This means that we now have 330 new shareholders since the acquisition of the company by Grace Kennedy. And I want to pause and take this opportunity to thank all the shareholders of Key and all the new shareholders of Key Insurance for the confidence that they have placed in the board and management of this company to take us in the future. I sincerely thank all of you this afternoon. If you look at the top shareholders, Grace Kennedy Financial Group, we own 65.2%, followed by JMMB, their equities fund, 11.7%, JMMB SL, 10%, World Net Investments Company, 9.6%, and MF&G Trust and Finance Limited account 57.9%. And there's something here that when I was preparing this presentation really stood out for me. The top 4 shareholders have over 1%. But if you look at MF&G Trust and Finance Limited, they have 0.9%. So what this is saying, fellow shareholders, colleagues, that 497 shareholders of Key has less than 1%, meaning that the shares of the company is widely held by small shareholders. And I take that very, very seriously. And I think that's a compliment to us, the management and the board of Key, that the number of minority shareholders under 1% totals 497. So what has happened since the acquisition of the company? The story is that the market cap on March 2020 was 774 million. October 21st, it is now 3.5 billion, an increase of 357%. Or to say it another way, the share price has increased from $2.10 to $9.60. Again, I want to thank the market, the shareholders, for showing the confidence in us, the board and the management, with this increase in the market capitalization of the company. And I can assure you, as the chairman of this company, we will not let you down in terms of your confidence in us. Let me now introduce, this is a little new for me also, virtually, the new board of directors. And before, let me thank the previous board of directors for their stewardship of the company. And I also want to thank the Gobin family, especially the founders of the company, for divesting their shareholders and having the confidence in Grace Kennedy and the board to take this company forward. I thank you, I thank the previous board, and I thank the Gobin family for their confidence in taking this company forward. So the new board, Don Webby as the chairman of the board. Let me go back. Rochelle Cameron, hope everybody can read it, is an attorney at law with over 20 years experience. I'm sure all of you know Rochelle. Herma McCrae, a very experienced banker, and in fact, Herma is on the board of First Global Bank and a very active member of the board, I can say. Mariam McIntosh Robinson. Mariam is the president and chief executive officer of First Global Bank. She's also greatly involved in the private sector organization of Jamaica. Natalia Gobin-Gunter, our retired chairman, I refer to her as Nancy. She is on the board. Linval Freeman, retired partner from Ernst & Young and a well-known accountant in Jamaica with over 30 years experience despite his youthful look. And he's also chairman of the audit committee. I should mention that Rochelle Cameron is the chairman of the conduct review committee, as we have put in place a very robust corporate governance system and program for this company. You have already met Carrie Ann Evans, an attorney at law. Kareem Tomlinson from Jamaica, GMMB Securities Limited. He's the general manager. He's also on the investment committee. Mariam Robinson is the chairman of that committee. And of course, Sandra Masterton, who was the previous managing director of the company, remains on the board. I'd like to recognize the new board of directors and thank them for their support. And in fact, the board since acquisition has been very, very active, and we have in fact met just about 8 times to ensure that the company is on the right path. And I know that the audit committee has been very active also. So welcome to the new board. Thank you very much for agreeing to serve Key Insurance. The future of this company is very exciting. The lady of the moment, Tamara Glaves-Husey, our general manager, who has been doing an outstanding job. Tamara is an attorney at law and chartered insurer with over 15 years experience in the general insurance industry in Jamaica and throughout the Caribbean region. And you'll be hearing from Tamara very shortly. So when the new board started our journey on April 1st of 2020, we basically mandated on 4 critical actions where we need to focus on. And focus is very important. I'm sure you have heard me say from time to time as a group CEO of Grace Kennedy, what gets measured gets done. So the first critical action for this company, we needed to stop the accumulated losses and loss of market share. You'd see from the audited accounts, which will be presented later, that the company for the year ending December 2019, lost $769 million. So first thing, stop the losses and stop the loss of market share. And if you're looking at the slide, which is now off, there's a green check mark there, meaning done. We also said that we need to be very focused with specific actions of a 90-day turnaround plan for the period April 1st to December 21st, 2020. And remember, we're operating in a very difficult environment with COVID-19. But we have said for that period, under the new board and the new management team, we need for this company to reverse those massive losses for the previous year. And for that 9 months, April 1st to December 31st, we need to show a profit. And I am happy to report to our shareholders this afternoon that we are in fact on track for that 9-month period to show a profit. And I want to congratulate the management team and the board for their focus in achieving this objective. And I'm confident that this will be achieved when our audited accounts are finalized for that period, for the 9 months. Then what we said is that, we need to look at a 2-year strategic plan. Let's create a vision for this company here, and we need to commit to our shareholders to give them a good return on their investment. As you have seen already, the share price has gone up by 357%. I have a check mark green because the plan was presented to the board of directors. The vision and the strategy of this company here is robust, clear, and I believe that is going to give the shareholders a good return on our investments. And what we said is that we recognize that the losses over the previous years have depleted the capital base. We're going to need the shareholders to recapitalize or put more capital in this company to give it the foundation to support this strategic plan going forward so we can give the shareholders a good return on the investment. And this afternoon, there will be a rights issue resolution where we will go to increase the share capital of the company for this rights issue. So I again give a check mark to the scorecard. So we were very focused in terms of the critical action items. I'm often asked by my fellow investors, the market, brokers, why did Grace Kennedy invest in Key Insurance? I must really recognize my colleague, Mr. Stephen Whittingham, who led on this initiative, this acquisition from really start to finish. And as you know, Stephen is the COO for GKFG. Grace Burnett is the CEO for GKFG. And they have really done a really good job in terms of focusing us on this potential acquisition. And I might also recognize GK Capital for the role that they played. But we saw basically 4 areas that would justify our investment in Key Insurance. We saw a significant amount of growth potential. As we speak, I think Key has about probably about 3% of the total market. We believe that we can double that market share within that 2-year time frame of that strategic initiative. There's a significant amount of synergies with the Grace Kennedy Group. As you know, Financial Services Division, we own First Global Bank. We have a very strong shareholder in GMMB. We own Grace Kennedy Remittances. And of course, we own Grace Kennedy Insurance, GKI, and we have been in the insurance business for over 30 years. So we have experience in this business, and there's obviously going to be some synergistic value in terms of GKI and Key. For example, our reinsurance program and other activities in terms of what I would refer to as administrative and IT activities that we can get some benefits, some savings, some efficiencies flowing to the bottom line. Specialized motor and home insurance offerings, and tomorrow we'll speak to that. And in doing our due diligence while we look at acquiring this company, the Key Insurance brand, the Key brand, is actually very, very strong in the Jamaican market. So we saw a big opportunity there. And of course, it forms part of Grace Kennedy's expansion strategy in financial services, not only in Jamaica, but in the English-speaking Caribbean. So we believe that if we executed on these initiatives, these potential strategic goals, then we're going to have improved profitability. And to support that improved profitability, we have 4 strategic drivers: sustainable growth and innovation. And of course, that would include digital expansion, which in these times, as you know, is the fastest growing area in business. You know, one of our consultants at the Grace Kennedy Group said to us that digital 4 or 5 years ago was a nice to have strategy. They said to us that a digital strategy now, post-COVID, is a matter of survival. So if you don't have a clear digital strategy, then you're going to have a problem. And I want to support that. If you have your annual report in front of you, and maybe I can show it on the camera. It is page 28. I'm not sure if the camera can pick this up. Can the camera pick this up? Is that possible? It's picking it up?
Yes.
Okay. You'd see that it's cyber liability insurance. And in the environment that we're operating in, and Key is basically really on top of this. I am very pleased that I can show the shareholders about innovation from Key at this AGM. cyber liability insurance. And you can have a read on page 28 of the annual report. And then we have consumer centricity to support it, really offering first-class service to our customers. And centricity also anticipating the needs of our customers and tailoring our offering to these customers. And you're going to see quite a bit of innovation coming from Key in terms of our growth strategy. Operational excellence by use of technology and internal controls, and a performance-driven culture. And I should have said at the outset that I want to also use this opportunity to welcome the staff of Key Insurance Limited to the Grace Kennedy family. And in fact, I had a meeting with all. Mark, it was virtual, but the energy, the enthusiasm, the commitment to this acquisition, I felt really, really pleased in terms of how it has gone. And the whole program of change management, which was introduced, have gone across very well. So let me welcome the Key staff to the Grace Kennedy family. We care, stronger together, performance-driven culture, accountability, and execution. So in wrapping up my presentation, and I'm going to hand over to our general manager, let me say that to our shareholders this afternoon and to the investment public and to the media, which I know is in the meeting, I'm very, very confident that Key Insurance will be a great asset to the Grace Kennedy Group. And as chairman of Key Insurance, I'm really looking forward to working with the new board and the staff of the company. Once again, thank you very much. I love this saying, #stronger together. I'm going to hand over. The technical folks will have to advise me. Tamara is in another room with social distancing. How is that going to work? Are we going to switch over to her now? All right, I'm going to take my seat and we're going to switch over to Tamara. You can tell me, she's on?
Yes.
Okay, Tamara, over to you.
Mute myself. Good afternoon, a special good afternoon to all our shareholders who are joining us via this medium. Thank you so much for taking the time out this afternoon to spend with us. Can you hear me? So this is our first annual general meeting by this mode, as stated by our chairman, and we really appreciate your presence. And I'll just share with you at this point our agenda. The presentation will be done in two parts by myself and Stuart Andrade, our Chief Financial Officer. So at the first part of the presentation, that's the 2019 recap, Stuart will be doing that for us. And then I will take you through what we have been doing since 2020, the outlook and capital adequacy. So I want to start off by just following up, as was stated by the chairman, like the rest of Jamaica, we are impacted by the COVID-19, in terms of our staff, our customers, and we have been putting in place measures, of course. Sorry? Nobody's heard me? Hear me now? Okay, I'm sorry, I was just told that I was not being heard properly. Can you? Yes. So I will pick up here, as indicated earlier by our chairman, we, like the rest of Jamaica, we would have been impacted by COVID also in terms of, and so what remains a number one priority for us is the safety of our staff and customers. We want to ensure that all is in place to make sure that they are healthy, and when they do business with us, that they're in a safe environment. And just to add to some of the initiatives that the chairman would have already indicated, we have changed or restructured our workspace to ensure that the work environment is accommodating social distance and, of course, reduce the likelihood of the spread of this virus. We have been very fortunate as a company. We have only had one positive case recorded, and we have, as indicated earlier by Mr. Webby, approximately 60% of our staff working from home. And so at this point, I'm going to ask Stuart, our Chief Financial Officer, to take us through a recap of our 2019 performance. Stuart?
Thank you very much.
Stuart, you need to unmute.
Go ahead.
Is that better? Okay. All right. So, as I was actually saying, can everybody hear me? Okay. So as I was saying, the 2019 performance in terms of the motor growth strategy is actually coming from 2017. It had a large push in 2017 and 2018. But due to that, it actually came with some adverse risk selections. Again, the previous management initiated a turnaround plan in 2019 to reverse the loss-making positions. And out of that, there was an initiative to rebalance the motor portfolio, which also resulted in a 21% decline in the motor premiums. Additionally, the company took out a reinsurance coverage for the fire catastrophe excess of loss reinsurance and the motor quota share designed to reduce the loss exposure on the motor portfolio. What did that result in? It resulted in the gross written premium being actually 22% down when in comparison to 2018. And the net premiums earned, I've been in insurance accounting for quite some time, and it's the first I've ever seen a net premium incurred. And so for 2019, instead of an actual earned premiums, what we had was incurred premiums of over 300 million, which was 127% down from prior year. In terms of gross claims expenses, that was up 45%, and the net claims ratio was actually down, again, on unusual, apologies. Sorry, on unusual characteristics. The premiums, the net earned premiums are normally earned. In this particular case, it was an incurred. In terms of the claims expense, you normally have an incurred. In this particular case, what we have is an actual income. And so what we saw was that it was 94% variance, in a positive variance. This when you compare the claims as a percentage of a net earned premiums. So some of the major drivers coming out of a net loss, and the net loss actually increased by, sorry. The net loss, actually increased by 60%. Severe claims, some of the major drivers are the severe claims on the motor portfolio, the reinsurance arrangements, which resulted in ceding majority of the keys gross premiums. There were low investment returns from holding near cash assets for liquidity and regulatory purposes, with a steep decline of the motor and non-motor portfolios, again, because of the rebalancing of the portfolio. And there was increasing admin expenses driven by the staff costs, legal and professional fees, and provision for bad debts. This in and of itself was actually told the story of what happened in 2019. I'll now hand over to our General Manager, Tamara, who will carry us through the 2020 business performance.
Thank you. Thank you, Stuart, so much for the recap on 2019. Okay, so let's fast forward to 2020, our business performance. And when we took over in 2020, under the guidance of the board, we were mandated, the management team with support of the board was mandated to come up with some pillars that we believe would help us to turn around the business successfully within a short period. And we came up with 10 focus pillars, and these covered the areas of internal audit, human resources, reinsurance, underwriting, claims and legal, information technology, operations, investment portfolio management, communication and change management, financial control, and capital management. And what we've been doing with these 10 pillars is that each month we would report to the board on all the initiatives that would have been executed. And I'm happy to say that this has been working for us. We have been to date, we have been very successful in executing the initiatives that we have been undertaking. And we've had, as Stuart mentioned earlier, the termination of the reinsurance arrangement that was previously in place. We do have reinsurance. We still have reinsurance in place, albeit a different type of reinsurance, but we're confident that we are able to manage the business under the new reinsurance arrangement that's in place. And of course, the reinsurance arrangement supports our business in terms of the underwriting and the claims management. And we're very, very prudent with our underwriting because we recognize that in order for us to continue to have your confidence, we must be able to show that we're growing the business, of course, in the right direction. And our communication and change management, the chairman would have touched on this earlier. Yes, we have been executing, I would say, very successfully here. The team is on board. We ensure that the communication is alive, not only with our team members, but also with our external stakeholders. And we continue to do so, especially in this time. Would have done some internal audit, and so we are currently executing on the findings of those. So I'm happy to say that with that 10 focus pillar, so with the support of the board, I believe that we are on the right track. And Mr. Webby would have already indicated to you the members of the board of directors. So I just wanted to pause here to highlight the members that support me in my role as general manager. We have Stuart, who we have heard from earlier, Mrs. Heather Bowie, our claims manager, Andrew Dunkley, operations manager, Caroline Isaacs, our reinsurance and property underwriting manager, and Napier McCleary, business development manager, Katie Da Silva, our senior HR officer. So coming out of those 10 pillars, what we did was, having put in place those 10 pillars, which form the foundation of our operations, we then condensed it to 4. So these are the 4 pillars that we will continue. So they have integrated in these, the 10, and we use these as our, I would say, in alignment with the Grace Kennedy strategic drivers. We're using this to guide us as we move forward into completing 2020 into 2021. And that would have been the rehabilitation of the company's corporate profile, as you'd have seen a new board in place, and our capital structure. We're focused on our market segment because it is our intention, and we will become one of the leading motor insurer in Jamaica. We're very confident that we will be able to achieve this. But to support this, then it's important that we also continue to acquire new customers and build and strengthen existing relationships. And so this is a main priority for us. And of course, we must operate efficiently. So we continue to pay and will be paying close attention as we remain nimble, given what's happening in the economy and the changing times. So just as a part of achieving our objective, customer acquisition, ensuring that our team remains committed and engaged and support the process, I'm sharing with you our team rally cry for 2020 and beyond, and you'll see it's a spin-off of our Grace Kennedy, our parent company, Stronger Together. The team felt that they needed to be stronger than yesterday, so this was put forward by the team, and we believe in it. So we continue to remind ourselves that today we'll be stronger than yesterday. As a part of our rebranding strategy, And our chair would have made mention that the key brand is very strong, but we want to continue to strengthen it. And so what we did was we've launched a campaign rather, a marketing campaign. And the theme of that campaign is Go Live, Ride and Drive. And the theme is in support of our core product offering. As Mr. Webby had mentioned, we have our motto and HOC, that's our homeowners product offering. And so what we did to strengthen that, we have put in place a marketing campaign, and I'm going to pause at this moment to share with you a video that is in heavy rotation on TV and on radio. This is just 30 seconds, so we're going to take the opportunity to share it with your shareholders.
Get the key, affordable insurance for you and me, for your car, for your house, and your things. Get it free. Every bus operator, every taxi, link up, 888 coffee. Watch out, just get your license and don't worry. Just for your car, you can save plenty. Up to 65% off your policy. Yeah, dial 888 coffee. Go, live, ride and drive with Key Insurance, the key to your peace of mind. Dial 888 coffee. That's 888-225-5539. www.keyinsurancejm.com.
So that's our ad. So that's the ad that we have supporting our marketing campaign. Yes, thank you. So I want to share with you what has been happening 6 months ending June 20th. And you, Mr. Wood, would have indicated earlier that we started running the business on April 1st, but we're going to take a look at the business as at June 20th. So as at June 20th, in comparison to 2019, our gross written premiums were down by 20%, approximately 159 million, and our net losses after tax was down by 99%. And in my next slide, I will expand a little bit on this, some more on this. So what were the major drivers for the Q1? And this is the first part, January to March of the year. As indicated by Stuart earlier, the previous management would have put in place a rebalancing of the portfolio strategy. And so as a part of that would have seen some risks not being underwritten that were previously written in the financial year ending 2018, and some coming from as far back as 2017. And this was really a deliberate strategy to realign the portfolio to manage the losses that were happening and to move the company back to profitability. So that would have impacted some of the renewals and the ability to write additional new business. Then, and also if you're not writing your premiums, then it will of course impact your bottom line. So what you're seeing here is that the net loss after tax was also significantly adversely impacted, ending at a loss of 339 million in comparison to 38 million for 2019. But I want to pause here to point out that we did make some strategic decisions during this first quarter, and these had to do with some one-off charges, which amounted to approximately 323 million. And you'll see here that 235 of the 323 million is related to the termination of the previous reinsurance arrangement that was in place. And then the additional 88 million relating to what we call deferred policy acquisition costs. So these two items had an impact of 323 million. However, the positive from it is that our net earned premium improved by approximately 160% over the Q1 results as a result of the termination of the reinsurance, the restructuring rather of the reinsurance program. When we look at Q2, what we're seeing here is improvement. So in taking over the company and looking at the business, assessing the underwriting, the claims and the operations, under the guidance of the board, what was clear was that we needed to move away from the culling of the portfolio, but to instead put in place a strategy that is supportive of growth. So we needed to bring the company back to profitability, which would have included how we're underwriting the business, our risk selection, and of course, our claims management. And you're seeing here that the gross written premiums, we're seeing some improvement over the first quarter because it was only down by 14% or 60 million when you compare to the second quarter in 2019. And by that time, as in June, we'd have launched our marketing initiatives, would have started by rebranding our building. So when you're coming down Half a Tree Road now, you're able to see our building and you see our big posters on the building, and we've brighten the paint, etc. So we're bringing attention again to strengthen our brand, and we're seeing we started to see the rewards of that in the quarter ending June 30th. And you'd also notice that there's a positive impact on the net loss after tax, and this is as a result of the continued benefits from the restructuring of the reinsurance program. And just to show you what it would have looked like, so here we have the 2019 results, and we also have the Q2 2020 against the Q2 2019 results. But what I want to highlight here is the positive in terms of the improvement in the underwriting loss of 21% and the net loss of 43%. And of course, these results, when these numbers would have been impacted, as previously stated, by the motor quota share agreement and some legal and professional fees, and which is associated to the selling cost of the shares to GKFG. So immediately you can see that we're very serious about regaining your confidence in the company and turning around this business to strong financial health. And I want to look at how we're going forward. And this is just a graphical representation of where we see this business going and how we want to get there. So we decided to show you 2018 straight to 2025. And you will notice that from 2020 onwards, we're projecting a growth. And one may ask how you intend to do that with COVID. And so in sitting down together and looking at our projections, we would have taken into consideration that there's a likelihood that COVID will continue to impact Jamaica for, maybe as much as another 3 years. And so with that in mind, we said we want to grow, but we're also ensuring that we're balancing. And so the major considerations would have been the impact of COVID, and we will continue to review our reinsurance program. And this is important because as the needs of our consumers change, or insureds, as we call them, as the needs of our insureds change, we want to ensure that we have a robust reinsurance program to support the business, support the products that we are offering. And Mr. Webb would have made mention to some of the products that we have. And we have in our segmentation, we have looked at our motor offering, and we're very serious about growing, particularly in the third party and the PPV segment of the market. And in terms of the property side, we're also very deliberate about growing in terms of the homeowners and renters policy. And this is really because we want to we want to grow the business, we want to increase our market share, and we want to also meet some of the unmet needs of the Jamaican people, because we see ourselves as the people's insurer. And so we believe that we must be able to provide essential coverage that our customers can afford. And so to support that, we also be paying keen attention to the synergy creation with related companies, and our chairman would have touched on that earlier. So we are looking in our group, GKI, our sister company, to see what synergies that we can have, and also across the Grace Kennedy and other related party groups. And in another major consideration for us is operational efficiencies that can be driven by digitalization. And we're currently putting in place, and we're happy to say that we are hoping that by November, we will have our online platform up. So we do recognize the need for our business to be using technology and to be able to reach all our insureds, new and potential insureds, wherever they are. And so these are some of the major considerations that we're putting in place as we move towards growing the business profitably. And so that takes us to our capital adequacy overview. Go back, Stuart. Go back. So we would have, as a part of our capital adequacy overview, we're sharing this information with you so you could, just see how the company has been moving since the financial year 2015. You would have noticed that from 2015 to 2017, the company was meeting the minimum capital test ratio. And this is a ratio that is put in place by the Financial Services Commission and is used to regulate as a regulatory tool for general insurance companies. So up to 2017, the company would have been meeting and or exceeding the minimum ratio of 250%. But fast forward to 2018, you're seeing where the company has not been meeting this requirement and currently not meeting this requirement, which is very clear that in order for us to get back there, we need to improve, we need to have adequate capital. And so that is the challenge that I would say the business now faces in terms of what we need to do. And so it takes me to this slide where we'll be asking the shareholders to consider the renounceable rights issue. And so our proposal on the table is supported by the initiative. So we are in the process of liquidation. So these are just two of the initiatives we're going to highlight here that the company has implemented to address the company's capital needs. That is the liquidation of a property that we have located on Nusswood Boulevard, because this will help us to reduce the capital requirement. And of course, we want to raise capital to support the business. We have assessed the needs and we would have already submitted to the board the capital adequacy plan, which was approved. And so at this meeting, what we'll be doing is seeking your approval as the shareholders to raise additional capital in the form of a renounceable rights issue. And we're asking you this, and we want to assure you, the management want to assure you that we will not let down your confidence in us. I know my chairman had indicated that before, but I just want to reiterate that point because we believe that the brand is very strong. We believe that we have the right people in place. We have the right support. Our board is very, very, very strong. And the intention is, and we will execute on that, to turn the company back to being a very profitable company in Jamaica and one of the leading motor insurer. And so we ask that you will consider our requests. Thank you so much for your time and your attention.
So thank you very much, Tamara and Stuart, for that very comprehensive presentation to our shareholders. I'm sure that they appreciate the details in those presentations. So we're going to open up for a few questions, and let me tell you, we have more than a few. So I'm going to try and cover them as best as possible, given the time frame that we're working with. So thanks a lot. And it shows that virtual meetings are alive and well in terms of the questions being asked, especially by Mr. David Rose. Let me start off first, and tomorrow, or Stuart or Kerry, I will call on you for your answers as I go through these questions. All right, the first question is there any plan to merge Key and GKGI? That's Grace Kennedy General Insurance. No, we have no plans at this time to merge Key and GKGI. And there was a follow-up question somewhere here. Yes, we are going to keep Key as a publicly listed company on the Jamaica Stock Exchange. So as we speak, there are no plans to merge Key or GKGI, but as I said in my presentation, there's obviously some synergistic value by both companies working together to be more efficient, especially in the area of operational efficiency using technology and that sort of a thing. So in fact, we have mandated the management, we the board have mandated the management to see how we can improve our efficiency ratios by looking at working with GKGI in that regard. Other question, how will management improve the company's underwriting performance? How am I going to do this now? Tamara, are you there to answer that question? Tamara?
I am here.
Okay, you got the question. How will management improve the company's underwriting performance? And colleagues, this is This is a learning experience for all of us. This is the first time that I'm actually chairing a virtual meeting, a virtual AGM meeting. So if you can bear with us in terms of some of the technical challenges that we may face from time to time, but we are determined to improve as we go along. So tomorrow, well, it's not only a virtual meeting, it's under the disaster risk management order. So we are social distancing. So tomorrow is actually in another room as we speak. So tomorrow, if you're on now,
Yes, Chair.
go ahead tomorrow.
Thank you. Thank you, Mr. Ravi. Since we took over management in April, the management team, with the support of the board, we would have executed a number of initiatives to support the strategic drivers as outlined in the chairman's presentation. And so some of the initiatives I want to highlight are, having looked at the motor book of business, we decided that we were going to issue a revised competitive motor rate guide. And this was done in May, because what we recognize is that in order to improve the underwriting performance of the business, we would have to ensure that our rates are competitive and that it is not only our direct customers, but also our broker partners would support us. We also implemented a motorcycle rate guide. So we started to sell motorcycle. This was not motorcycle insurance rather. This was not being done previously, but we also saw an opportunity here because quite a bit of Jamaicans use motorcycle as a mode of transportation, and that has not been doing too bad. And we expect that it will continue to grow as we market it some more to the public. We have also been reviewing our outstanding claims liabilities, and this is very, very important because, as you can appreciate, the type of business you write will impact your claims result. So that has been ongoing. We've also built out our business development department by bringing on board a business development manager, putting in place 2 business development officers, one to support the non-motor side of the business and the other to support the motor side. And we have been working on creating and also rebuilding, strengthening our relationships with our strategic partners. And I'm happy to say that we're seeing the results of these initiatives to date.
Thank you. Thank you, Tamara. And our new reinsurance program, I'm not sure if you mentioned that, we're going to see significant savings based on your skillful negotiations. So
Yes,
thanks
Chair.
a lot, Tamara. Another question, several mergers and transactions have taken place within the industry over the past 2 years. Can we expect Key to expand outside of Jamaica? Well, as you know, fellow shareholders, that a part of the strategic vision of Grace Kennedy is for our financial service division to be a major player in financial services in the English-speaking Caribbean. So having said that, to answer your question, yes, Key Insurance, once we get Jamaica right and start to see the positive signs of growth and a proper return on our investment, I would expect that Key would be looking at opportunities in the English-speaking Caribbean for growth. So the answer to your question, let us get Jamaica right. Let us build that balance sheet and make some profits, and then we can look outside of Jamaica. So I would say that's a medium-term strategy for Key. Another share, Troy Williamson. Will Key have its first APO plan, or when? Sorry. First of all, let me make it clear is that the request this afternoon by the board and to the shareholders is not for an APO, additional public offering. It is for a renounceable rights issue. So I just want to make that clear, Troy. So we will seek approval this afternoon from the shareholders, which is the first step. And once we receive approval, then we will meet as a board. But as far as I am seeing, we're hoping that the rights issue will come together before the end of the year. I know Kareem Tomlinson from JMB and our team at GK Capital have been doing all the modeling and that sort of a thing. So I would expect that we will make a firm decision in terms of timing as quickly as possible. But I certainly think, all things being equal, that we should get it out of the way in terms of finalizing the issue by the end of the year. Stuart, I think you addressed this in your presentation. Since this is actually a very good question. Since GKFG has taken over, that's a great skin of financial group, profitability has been worse than before. Why should we believe the future for Key is any better than before? I said, and that's a really good question, and these are sort of questions I like. Be upfront, and we will try and answer them as best as possible. As I said in my presentation, and just to paraphrase, is that we have seen actually some very positive results in terms of the mandate by the board to stop the bleeding and turn around the company with a 90-day plan. And I'll say to you that the company for the last few months has actually been showing profits and growth in terms of the top line. I think Tamara and Stuart mentioned that some of these losses that you have seen is for strategic reasons, in the sense that they are one-off expenses or one-off expenses to the bottom line. But it is with the intent that going forward, those one-off expenses going to realize significant efficiencies and savings. And this is what we have been realizing. Stuart, sorry, you want to add anything to what I've just said? Good question. Why should they believe us? We have outlined our strategy, and we have seen some short-term gains that we have been experiencing over the last few months in a difficult environment. But Stuart, let me hear what you have to say on this one.
Well, Chair, you said it correctly. I think Tamara went in, when you look at Tamara's slide, the normalized projections actually tell the story. We're 21% better in terms of our underwriting position and 43% better year over year in terms of the net loss. Again, you've actually spoken to the one-off expenses, so I won't expound anymore on that. But just to say that hereafter, we should be seeing better performance from the company.
Yeah, the other way I would also answer that question is that I have a lot of confidence with the team. With the team, together everybody achieves more at Key. We have a strong general manager. We have a strong CFO. Our risk management team, underwriting team is also very strong. We got some really, really good staff from Key in the company. I think we have a right team in place to deliver on our objectives. So I hope that answers your question. If not, you can send me a note, because I thought that was a really good question. Let me just try and read down. Sorry. What is happening, why you may hear me pause from time to time, colleagues, is that Kerry and our company secretary is receiving the questions online, and then I am getting a piece of paper with some handwriting that is not the greatest to try and interpret what Kerry has just written. So forgive the silent pause sometimes. All right, so this is Tamara, probably this is for you. JNGI offers a service to take your vehicle to the depot. Will Key consider this? And this is from Neri Dawn Storage.
Okay, thank you, Chair.
Can you say that one tomorrow?
Yes, Chair, I can take it. So we currently do not offer it, but I would not say we're close to the consideration. As we continue to look at the business and the needs of our customers, I'm sure we'll be making some changes with a view to ensure that we retain our customers and to gain new ones. So I would say that this is something that we will give consideration as we continue to look at how we expand the business and meet the needs of our customers.
Okay, thanks. And that's what we mean. Nari, by asking that question. We want to be really innovative. We want to be consumer-centric. We want to meet the needs of the customer. So if we see that there is a need in the marketplace, we are going to try our best to meet it. David Rose has asked quite a few questions, and I'm going to try and go through a few of them, but giving other shareholders an opportunity to ask questions. David, to answer your question, and you always ask very good questions, it is not Grace Kennedy's intention to renounce our rights. We will be taking up all our rights with this issue here. And based on the feedback that our investment bankers have said to us, we expect all or most of our current shareholders to take up their rights, because we want them to participate in the future benefits of this company. Some of them have been shareholders for a very long time, and I can say to you very confidently that they, as a shareholder, as the largest shareholder in this company, the future, the outlook of this company looks bright to give the shareholders a good return on their investment. And Grace Kennedy will be taking up our rights. One may ask the question, why a rights issue, not an APO? I want our current shareholders to benefit in a significant way through a rights issue for this additional capital that we are hoping to raise. Any more there, Madam Secretary? Am I running out of time? Let me see if I can squeeze in one more. Tamara, this is for you again. With respect, and this is from Mr. Rose again, with respect to the non-motor arm of Key, could you explain what type of policies are offered? I think you covered it in your presentation, but maybe you need to say it again. Also, how will the company be taking advantage of its potential recapitalization to expand further in these categories of insurance? Tamara, are you there with me?
Yes, Chair, I'm here.
Go ahead.
Okay, so under the non-motor portfolio, we do offer homeowners insurance, we offer engineering, personal accident, employers liability, public liability, contractors all risk, small business insurance, and everything that forms a part of the general insurance offering that is not motor. So we do cater to the needs of businesses, both small and large, and also to individuals in terms of their personal accident, because a motor policyholder can buy personal accident coverage, which will help them with their medical expenses in the event of a motor vehicle accident. So we do have that under there. And yes, we do have a strategy to grow that arm of the business. As I would have indicated in my presentation, we do have in place now a business development team, and a part of their objective, which is something that we manage every month, is an amount of new business that is brought in under the non-motor portfolio. And we've been very, very active in ensuring that as we write these risks, we stay in line with our insurance arrangement. And we also work with the market to ensure that we manage out the average rates, because when you're selling these businesses, you want to ensure that it's priced properly. And so we've been very, very deliberate in terms of growing the non-motor part of our business. So we have business development officers going out, seeking direct business, and also working with our broker partners to grow that arm of our business. And that will continue into 2021 and beyond.
Okay, thanks, Tamara. The recapitalization of the company, the pending rights issue, which we have been discussing, let me say that the rights issue, first of all, will, as I said in my presentation, will meet the regulatory requirements as outlined by the Financial Services Commission. That is the first one, because the company over the last few years has been accumulating losses. So we need to, that's why I use the term, David, very carefully. We have to recapitalize the company. We have to put capital in the company so we can support future growth of the company. Because when you grow the company, you're going to need more capital. The other thing that I'd say, and I am pretty strong on this one, and you'd have read in the release that Stephen Whittingham has been in charge of digital transformation of the Grace Kennedy Group, and by extension, Key Insurance. And digital transformation comes with a cost, eh? It comes with a capital cost also, and the rights issue will help in that regard. So the rights issue proceeds is going to strengthen the balance sheet, meet our regulatory requirements as required by our regulators, Financial Services Commission, but it's also there to support future growth of the company as we grow our GWP, as we invest in digital transformation of the business, as we invest in technology for efficiency as we move forward. And who knows, maybe there could be some acquisitions down the road when we settle down in terms of the performance of the company. I'm getting the signal from my timekeeper and company secretary that I'm out of time. If I have not answered all your questions, because there are quite a few questions that we still have, please forgive me. I'm going to ask you, the questions would be online, so we can save them, and then we can put them on the website. And if you can do that for me within 48 hours, I really want to be proactive in terms of answering these questions. So my fellow shareholders, hopefully we have covered some of the questions well. If not, you can always send me an email. My email address is don.wehby, W-E-H-B-Y, @gkco.com. I would welcome feedback in terms of the questions and the presentations of Key Insurance Limited. I believe that feedback is important for one to improve in terms of their performance. So thanks a lot, everyone, and I'm really reaching out to you in the interest of time. If you can, we'll answer the questions, and if there are any more questions, please send them in, and we'll do our best to answer them. And thanks a lot, Tamara and Stuart. I thought your presentations were of the highest quality. Thank you.
Thank you, Chair.
Okay, so I'm now moving to approval for increase in share capital. And Madam Secretary, you can guide me as I move through. So may we have a motion for the approval of the following resolution: that the authorized number of shares in the company be increased from 496 million ordinary shares to 700 million ordinary shares by the creation of an additional 204 million ordinary shares, and that the authorized share capital of the company upon the creation of these additional 204 million ordinary shares in the company of no nominal or par value be unlimited. Moved by David Rose. Seconded by
Andrew Masado.
Seconded by Andrew Masada. Thank you, David. Thank you, Andrew. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you submit your vote in favor or against. I will pause a bit and see what's happening here.
Few minutes.
Let me get my Catherine Speak water. Best water in Jamaica in the world.
We have 30 more seconds.
30 more seconds for technology.
Go for unanimous. Okay. Yeah.
Right.
The votes we have unanimous. Unanimous.
Okay, great, fine. Technology is so cool. We have 100% of our shareholders unanimous agreeing with the resolution. So thank you very much, everyone. Thanks a lot. Approval of rights issue. May we have a motion for the approval of the following resolution. That the company hereby approves the issue of ordinary shares. In this resolution, new ordinary shares as part of the unissued authorized capital of 122,820,288 ordinary shares, or such greater amount as the directors in their absolute discretion may approve, for the purposes of raising capital for the benefit of the company. The new ordinary shares to be offered to the existing holders of ordinary shares by way of a renounceable rights issue on such terms, including the number of new ordinary shares, the new price per new ordinary share, the proportion of new ordinary shares to be offered in relation to existing ordinary shares, stock units held by the holders thereof, and the record date for determining the eligibility of such ordinary stockholders to subscribe for new ordinary shares, as the directors and/or any duly appointed committee of the directors shall determine. And additionally, we ask members to approve that the directors be authorized to dispose of all such new ordinary shares not taken up by holders of ordinary share stock units to whom the offer is made in all such cases on terms and conditions as the directors may consider expedient in their absolute discretion. Further, on that issue, the new ordinary share shall be converted and/or confirmed to be ordinary share units and shall rank in all respects pari passu with the existing ordinary stock units of the company. Moved by
One moment. Gerald McCoy,
Gerald McCoy.
seconded by William Masterton.
Thank you, Gerald. Thank you, William. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you submit your vote in favor or against. I will again take a 30-second break for the votes to come in. Okay, all right, we are doing well. We have received another 100% vote. So the votes having been submitted, the secretary has now confirmed that 100% has voted in favor of this resolution. Thank you very much, Madam Secretary.
Amen.
The auditor's report has been circulated to the members. I will now ask for Mr. Garfield Reese of PricewaterhouseCoopers to read the auditor's report. Mr. Reese.
He wasn't right. 1 second. Mr. Reese?
I can step up for 2 minutes. Right?
Good afternoon, Good afternoon, shareholders. Independent Auditors Report. To the members of Key Insurance Company Limited, report on the audit of the financial statements. Opinion. In our opinion, the financial statements give a true and fair view of the financial position of Key Insurance Company Limited, the company, as at 31 December 2019, and of its financial performance and its cash flows for the year then ended in accordance with international financial reporting standards and with requirements of the Jamaican Companies Act.
what we have audited. Key Insurance Company Limited's financial statements comprise the balance sheet as at 31 December 2019, the statement of comprehensive income for the year then ended, the statement of changes in equity for the year then ended, the statement of cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the financial statements section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We're independent of the company in accordance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, the ISBA Code. We have fulfilled our other ethical responsibilities in accordance with the ISBA Code. Our audit approach, audit scope. As part of designing our audit, we determined materiality and assessed the risks of material misstatement in the financial statements. In particular, we consider where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audits, we also address the risk of management override of internal controls, including, among others, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. We tailored our audit scope in order to perform sufficient work to enable us to provide an opinion on the financial statements as a whole, taking into account the structure of the company, the accounting processes and controls, and the industry in which the company operates. Our 2019 audit was planned and executed, having regard to the fact that operations of the company were largely unchanged from the prior year. However, subsequent to the year end, 65% of the company's issued shares were acquired by Grace Kennedy Limited, Grace Kennedy. As disclosed in Note 2A to the financial statements, Grace Kennedy has prepared a detailed plan which aims to return the company to profitability, and it has formally undertaken to provide the company with sufficient capital support for a period of at least 1 year from the date of issuance of the financial statements to enable it to meet its minimum capital requirements as determined by the regulators. Therefore, capital management as a key audit matter in the prior year has not been included in the current year as a matter of most significance. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the financial statements of the current period. These matters were addressed in the context of our audit of the financial statements as a whole and informing our opinion, and we do not provide a separate opinion on those matters. Key audit matter. Valuation of incurred but not reported claims for property and casualty contracts. See Notes 2N, claims incurred but not reported, 3B, estimates of claims liabilities, and 24 of the financial statements for management's disclosures of the related accounting policies, judgments, and estimates. As at 31 December 2019, total incurred but not reported reserves amount to $746 million. The methodologies and assumptions utilized to develop incurred but not reported reserves involve a significant degree of judgment. There is generally less information available in relation to these claims, which can result in variability between initial estimates and final settlement. Management has engaged an independent actuarial expert to assist in determining the value of the claims incurred but not reported. We focus on this area because underlying these methods are a number of assumptions and judgments relating to the expected settlement amount and settlement patterns of claims, which are subject to complex calculations. How our audit addressed the key audit matter. We tested the completeness, accuracy, and reliability of underlying data utilized by management and its external actuarial experts, to support the valuation. We evaluated the work of management's actuarial expert, including their independence, experience, and objectivity. We were assisted by our actuarial expert and assessed the actuarial valuation performed by management's actuary. We considered the suitability of the methodology used in establishing claims liabilities against established actuarial practice and our knowledge and experience. The methodology and assumptions used by management in establishing the reserves were found to be consistently applied and appropriate in the circumstances. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the financial statements and the auditor's report thereon, which is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statements does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the financial statements, our responsibility is to read other information identified above when it becomes available and, in so doing, consider whether the other information is materially inconsistent with the financial statements or our knowledge obtained in the audit or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the company's ability to continue as a going concern, disclosing, as applicable, matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the company's financial reporting process. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individual or in the aggregate, they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism through the audit. We also identify and assess the risks of material misstatement of the financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for opinion. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, or the override of internal control. Obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern basis and, based on the evidence obtained, whether a material uncertainty exists related to events or conditions that may cast a significant doubt on the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosures in the financial statements, or, if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the company to cease to continue as a going concern. Evaluate overall presentation, structure, and content of the financial statements, including disclosures, and whether the financial statements represent the underlying transactions and events in a manner that achieves fair presentation. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be sought to bear on our independence, and where applicable, related safeguards. From matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the financial statements of the current period and are therefore key audit matters. We describe those matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extremely rare circumstances, we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Garfield Rees. PricewaterhouseCoopers Chartered Accountants, 18 May 2020, Kingston, Jamaica. Thank you.
Thank you very much, Auditor Rees. I know the auditor's report, Garfield, is now becoming the longest part of our AGM. You did very well. You did very well. I know it's not an easy task, so thank you very much. Much appreciated, boss. Okay. May we have a motion that the audited financial statements for the year ended 31st December 2019 and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. Moved by David Rose, seconded by
William Masterton.
William Masterton. Thanks, David. Thanks, William. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you submit your vote in favor or against.
Yes.
The votes have been submitted. The secretary has once again confirmed that we have 100% votes in favor. So the majority has voted in favor of this resolution. Thank you very much, everyone. Re-election of directors retiring by rotation. Sandra Masterton retires by rotation in accordance with Section 97 of the amended Articles of Incorporation, and who, being eligible, offers herself for reappointment. May we have a motion for Mrs. Masterton reappointment? Moved by
David Rose.
David Rose.
Thank you, Mr. Rose. Carleen Isaacs seconding.
Who's that?
Carleen Isaacs.
Carleen Isaacs seconded. Thank you, David, again, and thank you, Carleen. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you cast your vote in favor or against, then click the submit button.
Okay.
Majority.
Yes, we have a unanimous vote in favor.
Okay, thank you very much. Once again, we have a unanimous vote. So the votes have been submitted. The secretary has confirmed that the majority has voted in favor of this resolution. Thank you very much. Approval for the re-election of directors retiring pursuant to Article 103. The next resolution deals with the re-election of the directors appointed earlier this year. As I am one of the directors subject to re-election, I'm going to ask Mrs. Natalia Gobin-Gunter to assume the chairmanship of the meeting at this juncture. Natalia, Nancy, over to you. Are you on?
I'm here. Can you hear me?
Yes, we are hearing you loud and clear. Nancy, you go
Great.
ahead.
Thank you, Don. So the directors retiring pursuant to Articles 103 of the company's amended Articles of Incorporation are Mr. Donald Webby, Mr. Linville Freeman, Mrs. Herma McCrae, Ms. Rochelle Cameron, Mr. Kareem Tomlinson, Ms. Carrie Ann Heavens, and Mrs. Miriam McIntosh Robinson, all of whom, being eligible, offer themselves for reappointment. May we have a motion that these directors who have retired pursuant to Article 103 be hereby reappointed en bloc. Moved by
Sachs and David Rose, seconded by David Rose.
Thank you. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you cast your vote in favor or against, then click the submit button.
Yes, go ahead.
I can't
Nancy
see on.
confirming that the votes have been submitted and the resolution has passed. We have votes, we have a vote, the resolution has been passed unanimously.
Thank you, Carrie.
Thank you,
Mr.
Nancy.
Webby,
Much
back over to
appreciated.
you.
And thank you very much to the shareholders for having the confidence, certainly in me as the chairman of the board, and for the rest of the directors. We appreciate it, and we will continue to govern this company as we move forward. The auditors of the company, PricewaterhouseCoopers Chartered Accountants, will continue in office pursuant to Section 154 of the Companies Act. May we please have a motion that PricewaterhouseCoopers Chartered Accountants, having signified their willingness to serve, continue in the office as auditors of the company pursuant to Section 154 of the Companies Act, to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the company. Moved by
William Masterton,
William Masterton,
seconded by David Rose.
seconded by David Rose. Thank you, William. Thank you, David. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you submit your vote in favor or against.
% votes in favor.
The votes have been submitted, and the secretary has confirmed that the majority has voted in favor of this resolution. Thank you very much. May we have a motion that the amount shown in the financial statements of the company for the year ended 31st December 2019 for fees of the directors be and is hereby approved.
On a motion from David Rose, seconded by Andrew Mesaro.
David Rose and Andrew Masada. Okay. Ladies and gentlemen, the resolution is now displayed on your screens. I ask that you submit your vote in favor or against.
Hopefully, I'm giving a little bit more time.
Thank you. The votes have been submitted. The Secretary has confirmed that the majority has voted in favor of this resolution. Once again, thank you very much, everyone. Ladies and gentlemen, this concludes the agenda for the meeting. I would like to thank you all for your continuing interest in and support of KEY, as well as your understanding of the revised format of this meeting due to COVID-19. We ask that you continue to do all you can to keep yourselves and your families safe and healthy. Thank you very much, and God bless you all. Thanks a lot.